And welcome out to a Friday edition of the Tackle Trading Halftime Report. As always on a Friday, this is Coach Frank hanging out with my main man, Coach Matt, as we get ready to dial in these markets. We got labor market. That dollar candle tells you pretty much everything you need to know. The things that you really like are not having a super great day when the dollar candle is that big. We'll break it all down. But before we do, welcome out Team Tackle. Great to see you. Hope everybody's had a fantastic week. And if you're new around here, welcome. Nice to have you with us. Always helpful to hit that sub button so you know when we're going live. If you like the show, give it a like, share it with a friend. You know, all of that fun YouTube type of stuff. Maddie, my man, how we doing today?
Doing fantastic, Frank. Excited to be here for another edition of the Halftime Report. And you are right. When the dollar is doing what the dollar is doing here today, a lot of things you like in the market are going to be hesitating, if not down a little bit on a day where the dollar has that type of candle. So it's one of those days in the market, but in general, doing really good. Excited to be here. Got a fun show plan. We're going to talk a little bit about the market, obviously. We're going to dial in the week that was, and we got GameStop's earnings report here today as well, on the same day where Roaring Kitty's doing a live stream on whether or not he's going to exercise some call options or not. Don't really care if he's going to exercise a trade. That doesn't really matter to me one way or the other, but it is a GameStop day in the market. A lot of conversation over GameStop.
Yeah, it's kind of the story right now because it's kind of boring in the broad market. Relatively boring week in the S&P.
Given the fact that we had labor market today, and yeah, you are getting a little bit of a boring day. Yeah, I'm okay with the boring day after some fading action in the market this week, though.
Yeah, it's up fading at the top, especially kind of in those huge dogs, right? We were kind of talking about that in pre-production. Looking here at the S&P, it's a good look, though, right? I mean, you did break, and you've got no real follow through, but you've also held the break, right? Kind of in that grindy drift to the upside of it. The 9 holds. That's typically something that we want to see, right? Not a bad look on the S&P going into next week.
Well, especially with what the dollar did here today. With the, you might as well just start with the labor market numbers here today. So let's pull up Forex Factory very quickly, because that's obviously the number one news that is kind of happening in the market. The most important information coming into the market was the labor market news this week. And, you know, it came in, if you were to tell me before today, we'd get a beat on average hourly earnings and we'd get a massive beat on labor market numbers. And obviously the dollar is doing what the dollar should do in an environment where you have that beat on labor market numbers and you have the beat on inflation, because you have to be able to price that into the Fed and what the Fed is going to do from a monetary policy perspective. And so that's positive for the economy, negative for the interest rate cut type situation. But if you're going to tell me that this is what the labor market was going to do this week and the dollar was going to respond that way, I would have expected a little bit of a fake out, honestly, on that breakout that you were talking about on Wednesday, where you did break out of that 53.50 barrier. And you kind of held it yesterday with that doji candle. As you can see here with the candle, the wick here, and this is one of the trends, not one of the trends, but one of the patterns we're seeing recently in the market just this past week is those buyers stepping in on any volatility here, Frankie.
Yeah.
You see it, you saw it last Friday, and this is where I wrote in the newsletter last week, and I'll certainly have something to say about it this week as well. But last week, when the market was selling off, coming into that 50-period moving average in that very important 5,200 zone, you saw that market sell off, and then all of a sudden, that last hour in the market, we were sitting live in the scatter report.
Yeah, it just kept going.
Like, are you going to stop? Are you going to stop? Are you going to stop? It was fascinating to watch. But then Monday, what do you see? Drop down in price, recover by the end of the day. Tuesday, drop down in price, recover by the end of the day. Those buyers are stepping in on any volatility here. And so that was one thing we saw last week that, and I talked a little bit about it in the newsletter. I talked about it in the halftime report, but that was a key difference in what we saw last time before we saw this 5% pullback here is at no point in this pattern back here in late March, early April, did you see any battling at support really. This candle, that candle, that candle, that's all battling at support. That's all the buyers stepping in after some degree of volatility. And it's good to see the bulls step in and fight for support. And then you get that power candle on Wednesday that breaks out of the 5250 zone, just a hair, not much. It danced that 5350 for a while, broke out. Thursday here, you gotta love a candle that kind of retests that breakout zone, doesn't do much of anything. And Frankie, I said on Wednesday, after a big day on Wednesday, you most likely see a candle where it basically bakes it in, right? It digests that previous movement. Well, that's what we saw yesterday. And then you had this, the candle here today, once again, very symbolic of what we saw with those buyers stepping in at support. This time, the 9 EMA for the first time in, let's count the days here, Frankie. Like right there, maybe on the kitchen, the 9, but this is early in the development here. So this is the first time you've really caught that 9 EMA, which is the #1 momentum indicator in the market. You caught it here pretty cleanly on that volatility. When you have the labor market numbers, you see the labor market numbers right here. This is exactly what the labor market numbers should have done today. What's impressive is those buyers stepping in at that cash open, bringing it right back up. And so it's not as clean in the entire marketplace as the S&P 500 is doing, but the entire market's not going to get cleaned up unless the S&P gets cleaned up. It's one of those chicken and egg type situations, right? But a good improving condition throughout the week. And the #1 thing, regardless of the price action fading up this week, it is good to see buyers and the market fight for support levels. You want to see that from a technician's point of view. And I do think we got a little bit of that this week. Is it good enough, though, for you to recommend an upgrade on the S&P 500?
Ooh, that's a tough question. And I think that one gets answered after you really broke down the sectors. I think that some weeks you kind of, you look at it, you're like, yeah, I'm pretty sure that's an upgrade. And in your head, you're just like, yeah, I'm upgrading at 5. I think this week, it really will be, do the sectors really back that up? Because you did bring it up. It's, the S&P does look better than, say, the RSP, right? The equal weight, but not to say that it's a disaster in those areas, but a little bit messier out there than maybe the S&P chart is showing right now. But you nailed it. It breaks. Those things get cleaned up really quick. Guys, have one request on the S&P here. Let's not repeat last Friday. Let's go ahead and call it good. Right. Let's not go crazy the last hour of the day. So we have a little cleaner entries on Monday morning. If you don't mind S&P, I would be all right with that.
I'm with you on that as well. And, just in general, this week, and really kind of Wednesday, Thursday, Friday of this week, but going into next week with CPI, PPI, and the Fed. Yep. Which, with what some of the other central banks are doing right now, it does put a little bit of more emphasis on the Fed next week. I still don't think they do anything, but maybe they give us a little bit of understanding on July versus September versus December. Maybe we get a little bit deeper, understanding of exactly what the Fed's plan is. But in general, I do think the best technical combination, fundamental combination geopolitical situation is if we do get a little bit of consolidation here through mid next week, and then you break out after you get through a lot of that economic data.
Yeah, it'd be nice.
Because a lot of the economic data is going to have a lot of algorithm move next week, in my estimation. Same thing we saw a little bit this week as well, but because those candles are not easy candles, Frankie. They're good development candles. It's good to see from the buyer's perspective. Absolutely. I would be a little hesitant on the short side of the equation, given the fact that the buyers are stepping in as aggressively as they have. But I still don't think front running from a market perspective in front of the Fed next week is the wisest thing. Maybe not the wisest thing. That's a bad word. Is the cleanest technical move going into what could be a pretty good multiple time frame breakout. So I'm parsing patterns and themes there, but at the end of the day, I do agree with you that it does feel like the market, kind of what I said on Wednesday. I'm not sure the market's got their information today to break and run as much as it has, unless the dollar just gives up everything that they've gained here today, and I doubt that's going to be the case. So yeah, whether it's done or not today, it's going to be interesting. It's obviously going to be a fascinating scouting report meeting as we watch this throughout the day with the coaches. But at the end of the day, I think the best setup is if we're still talking multiple time frame breakout scenarios going into Fed day, and then we get a cleaner environment where there's not as much debate on the macro condition. And that's really what the issue is right now with the volatility, is there's a lot of debates on the macro condition.
Yeah.
Well, it's amazing what the Fed can do to clean up that macro conversation really, really quickly.
Yes, that would. So we're just saying a couple more doji. Hey, we got 2 dojis. What's 2 more going into Wednesday, right?
I don't think it's too much to ask.
We're halfway there.
I think it's too much to ask.
We are halfway there. Well, it'll be a fun one to watch. Good luck going into the end of this week. That is for sure.
It's out there for the watch list candidates as well.
Yeah, there's some interesting setups out there. Maybe not as many super clean as you would think when the SP looks like that, but there are some really clean setups. I'm excited to find them with you and the rest of the team in the scouting report meeting. But before we do that, Maddie, let's sneak back, take a peek at that dollar, and then we'll take a look at gold, because that dollar is kind of the story, especially as we get into the metals, right? Because like I said, you would have expected a little more volatility maybe to the downside in stocks, but it's certainly not the metals haven't missed it, right? They didn't miss it, and it makes sense from a the way things work type of perspective. Usually you get a big green bar on the dollar. You are not getting a big green bar on the metals, right? Has it done enough, or is it just okay? Let's let this move play through. Let's watch that 50. Let's watch that pivot. That's kind of that break that might put in my head. It's kind of, we get above the 50 and above that pivot. That's kind of that break that might, put the pressure on the stocks as a whole, the S&P in particular. Underneath here, I think I kind of want to see it get digested within this zone, at least in the short term. That's kind of how I'm viewing it. Are you looking at it the same way? You see it a little bit differently?
I would be a lot more ambitious on that breakout on the S&P if the dollar was underneath the 200-day moving average here. But that power move on the dollar, I think it does hesitate. At least it does for me. It makes me hesitate a little bit on the call on the S&P 500. So I definitely do believe the best scenario here is a combination breakout on the S&P with a breakdown on the dollar. That was its likely scenario, quite frankly, until you got the power move on the dollar here today.
Yeah, now we're just too far away from the breakdown point, right?
Too far away from that 104 to really kind of see a breakout on the S&P without further development, which means you get a couple dojis, a little bit of downward movement in price on the dollar, you can get back in line with that. And that's one of the things that I look at when you're doing cross, market analysis, when you're looking at the dollar in comparison to the S&P. And the dollar's, a weight on the S&P when it's moving in to the top side. So you got a little bit of concern here on the dollar regarding the market itself. That can get cleaned up fairly quickly next week, in my estimation. What I don't think is going to get cleaned up very quickly, in my estimation, we talked about this before, this is not necessarily a directional conversation on gold as of right now. It's more of a cash flow philosophy on gold right now, with that next potential technical trigger being the breakout of 2450. That could change if we start working deeper here, Frankie, from the philosophy of add versus hesitation, but you still got the same philosophy of general cash flow. But I do want to talk about the 2 things that did occur here on gold. Number one, you had the labor market news. Obviously, dollar up, gold down. That's another day that ends in Y. Right? Nobody's shocked, because we're talking about 92% correlation between the dollar, inverted correlation between the dollar and gold. So that's another day that ends in Y. But you also had news come out of China today that suggested China, for the first time in a while, did not buy any gold last month. Okay, now big news coming out of China, because China's been hoarding gold, and every country and every central bank has been hoarding gold. Now that created a little bit of volatility to the downside, so much volatility that it probably convinced China to start buying gold in June.
Probably.
Yeah. I don't think China's going to stop buying gold because of today's candle. No.
It seems unlikely. They might like today's candle.
No, they're not. But I still see it the same way. It's another day that ends in Y. I got a long-term philosophy on gold. If you don't have a position, you should start building a position. Think about it from just all the data here lately. All the data that we've seen lately suggests stagflation. And I do think that's one of the reasons the markets are having a little bit of a difficult time pricing in some of this data, because usually they price in inflation going up, inflation going down, markets going up, markets going down. Stagflation economic analysis is a little bit more complicated, quite frankly, because you get a little bit of good, you get a little bit of a bad, and I do think that's a little bit more difficult to analyze. So in general, short-term neutrality here, that's been the case on gold for a little bit of time. General cash flow environment on gold, that's kind of been the philosophy for the last couple of weeks here. What patterns emerge out of this volatility can be important, but we did give up the 50 period moving average. I don't care what the instrument is. It could be your favorite gold, it could be your least favorite. You're always going to respect a 50 period moving average getting violated, especially when you're talking about the potential of it violating on a multiple time frame. So it doesn't change my overall opinion on gold. Of course it doesn't. Nothing, but I really don't think anything could change my opinion on gold, Frankie. I'm really kind of trying to think about what could change my opinion on gold.
It'd be something that you hadn't even thought about or seen, or like it could theoretically exist, but you don't know what it is, right?
No, it's not in the current data set. I can tell you that. It's not in the current inflationary projections, and it's not in the current economic projections. It's not in the current macro geopolitical conditions. It's not in the, oh, well, let's put it like this. When you have a macro philosophy of you're in the third phase of a currency cycle, that the dollar from a reserve status is going to constantly give up a little bit of reserve over the course of the next 10, 15 years. I don't think there's anything in the short term that could change your opinion. If that's what you're anchoring on, and that's what I do anchor on gold, I don't think there's anything that could change my opinion.
Yeah, it seems unlikely. So I got one question on this. So like I said, you breached the 50. It's kind of lining up with the 9 weekly. You've got that old pivot just a little bit below that. Is that break of any of those three things enough to get a little bit more aggressive in the management of your cash flow plays on gold?
Yeah, well, the only thing I think that would change, Frankie, is maybe you be a little bit more aggressive on the deltas you're selling on cash flow systems like covered calls.
Right.
So you come to GLD, for example, which is one of the instruments people like to invest in gold. There's other leveraged ETFs that you can do with a little bit of a lower dollar price and get a little bit better cash flow on, but I'll just use GLD as an example here to answer that question here, Frankie. When you're looking at GLD, and I'll just go out to 42 days just to do like a standard cover call type situation. Yeah, like look, for example, right here, if you are very concerned about volatility right now and you wanted to just lock in whatever you could here, you could sell an at the money covered call if your expectation is gold is going to continue to go down. Now, would I do that? No, I don't like to tighten up that on gold, for example. I would only do that if I wanted to get out of a position to a certain extent. And so you probably would just simply come down to one of the higher deltas. So if you're a little bit more concerned, you'd probably sell that 35 delta. In a general cash flow system on something like gold, where you really don't want to get called out, you'd probably come down a little bit lower and just bring in a token, little bit of cash flow, maybe that 21 delta. So in terms of the aggressiveness in how you manage covered calls, it's not necessarily the time aspect of it. It's really the delta, right? So when you get really concerned in a covered call environment on one of your, not a covered call environment, but a long-term asset class that you've owned, and you get really concerned. Well, when you get really concerned, you'd probably selling somewhere around a 0.40 delta. Even at some times, depending on the type of volatility, traders can easily sell 50 delta contracts on covered calls because their expectations is price is going to go down, which means those deltas will go down fairly quickly as well. I don't love that on gold, but again, if you are looking at a little bit more aggressiveness, then you would be looking at that 34 delta. If you're looking a little bit more conservative, you'd be looking at that 21 delta. So in terms of, for example, Frankie, this conversation is actually a really important conversation when it comes to long-term assets that you will actively manage over time, because there are times when you want to allow growth, and there's times when you want to lock those risk graphs down and you want to bring in some cash flow to offset whatever the risk factors is. And I do think in gold right now, we are looking at one of those environments, and we've been talking about it for the last couple of weeks, where it is a cash flow environment to a certain extent. You had a deeper retracement, you got a double top against the price action. And so it's just one of those situations where the traders would debate the delta more than anything here, Frankie.
Yeah,
so it's a delta conversation when you're talking about how aggressive you want to lock down the risk graph in covered calls, how aggressive you want to alleviate some of the risk factors out there in the marketplace. And we're talking about gold here, but I think you can put that conversation on any asset class that you're looking at, man.
Oh, absolutely.
From a long-term perspective.
Yeah, absolutely. Love it. Appreciate your thoughts there. Let's take a sneak peek over at crude. This has been a fun one this week, Maddie, just purely technically, because you got the break of that 200 weekly. We talk about the concept of gravitational pull, quite a bit here at Tackle Trading, and kind of expect that to be a battle throughout the week. We've got a good chunk of it. It doesn't look like it's quite going to be able to close back above that 200 weekly, but took another good run at it. Now we're into kind of, at least on the daily chart, pretty standard go or don't type of bear retracement, 9-slapper, right?
Yeah, I see this as a bearish retracement, and with confirmation, I think this is shortable, quite frankly. And I say that for two reasons. Number one, you gave up a lot this week, Frankie.
You did.
Like, you gave up a lot this week, and that a lot this week is something that we've anchored against quite a bit. And you did give up that 20-period moving average. Now, is there a scenario where you can get back up above 76? Of course there is.
Oh, the day is not over yet, my friend.
I don't think it would change my philosophy that much. I don't think it would change my philosophy, but this would be the first time we did officially close underneath that 200 weekly moving average. It's just a couple pennies, but a close underneath is a close underneath, brother.
Yeah.
And so look back here. At no point did you close underneath that. Did you close underneath that? You're closing underneath that, and this looks like a lot of volatility coming into it. So I see this as increasing volatility to the downside, increasing momentum to the downside with a 9-slapper and a bearish retracement scenario that's coming into some pretty important overhead that may not be able to break very cleanly. So I do see this as a technical short, but then when you lay on top of that the fundamental argument of OPEC does not have your back any longer. And I don't know what my third topic is going to be for the newsletter this week, but it's certainly, because there's a couple major things happening in the market right now. One of them might be a review of, because I do 3 topics in the first of the newsletter every week. I do a technical update, I do an earnings update, and then I do a random
you got dealer's choice,
something that's on my mind, right? I've wrote about Tech Turf War. I've wrote about the GS ratio. I've wrote about daily routine. I've wrote about a lot of different things in that third piece, because I usually pick something that is a major topic of that week. And right now, with Saudi Arabia and OPEC signaling to the market that they are going to emphasize market cap over the cuts and the stability that they have been focusing on, that reminds me of 2014, 2015, when we went through the fracking war. And the fracking war was a very, very important historical moment for OPEC and Saudi Arabia. And I thought it taught them extremely valuable lessons that they were not going to repeat again. But it's amazing what time does sometimes, Frankie. They're repeating some of those mistakes of the fracking war. And the number one thing that they're going to repeat here is, you are not going to defeat the American fracking companies. It is not going to happen. You're not going to do it. It's not going to happen. So Saudi Arabia, you can do whatever you want. You can drive that price down all you want. You're not going to win that war. And I thought they learned that in 2015 when they lost $100 billion. They had to tap into their retirement accounts for the first time in history. And they had to pull a massive mea culpa in later 2015 on their fracking war. And again, they didn't announce that this week, Frankie, but they don't come out and announce those things like that.
Yeah, that's not how it works, right?
But when you go for years of market stabilization, and that's the philosophy that OPEC has had for years and years and years, to now earlier this week being like, yeah, we're not going to do that anymore, guys. I think that fundamentally changes the outlook to a certain extent. So I see this as a fairly negative thing in the short term for crude oil. We'll see how that plays out, that macro thing plays out. But but that's kind of the philosophy here. Now how to kind of track it and apply it, that's just going to be a technical conversation more than anything. Like we like it right now. We're talking about it in detail right now, because we got a doji at the 9 against a bearish retracement with momentum to the downside in a bearish trend.
That's going to catch your eyes technically. Yep.
But you want to understand, and I think it does increase, at least it does for me, increase my confidence when I understand the whys behind the price movement.
Yeah, it makes you feel a little bit better, especially on these big things, right? On stocks, you kind of learn a lot of times that there is no why, right?
GameStop today.
But on these products, and you can usually map out a fairly cheap risk control type of play on USO if you are looking. That is an intriguing option.
Well, and we do put ETFs on the traders report. We'll put them on the bull side a little bit. I think there's a good debate whether or not USO makes the traders report this week.
Yeah, I think there is too.
In the short term, it is one of the better bearish retracements in the market this week. You look at it on a weekly chart, complicated analysis, but that's that bearish retracement with volatility to the downside, and you're fighting for it's not the 200 weekly, but it's the 50 weekly here, and you're fighting for the same type of thing. Confirmation here is king, queen, country. Confirmation is red candle does not mean price went down. Red candle means price went down from the open. And so that's all that's happening here today. Slowing momentum candle at the 9 EMA with confirmation underneath the low of the day. I do think that's good enough to have a short-term swing trade here. What's your thoughts?
Yeah, I couldn't fault it. That kind of fits right into the old 9 slapper conversation, right? You get to that 9, the closer you can build the trade around the 9, the better your risk to reward, right? The 9 slaps it, you get a good reward. It doesn't, you get out quickly, you take a small loss. I love a 9 slapper, that. So it doesn't really matter what I'm looking at. If I'm seeing a 9 bouncer or a 9 slapper, I'm usually prepping it and seeing if it checks the boxes.
And I always like to play the game. If it was a stock, right?
Yeah.
If it was a stock, we would absolutely be looking on the short side here.
100%.
Absolutely. 100%. Yeah. I agree with that. All right.
Yeah.
Dina has a question, Frankie. NVIDIA, I thought the split was going to occur here today. I thought the split was on Monday.
I think it is on Monday as well.
Monday. I think Monday is the split day here. So let's all get excited for a little bit of downward movement in price on Monday for NVIDIA.
Yeah, I think that's probably the most likely thing. And then, maybe Mark can get his pullback. We'll see.
Gun to head, split day, down or up on NVIDIA?
Oh, down, I would say. I think it gets bought back up relatively quickly, but the day of, if I had to guess, it's down.
Mm-hmm.
It'll be fun. It'll be fun. Yeah. Well, hey, at least they're only going to be, 12 or $125 instead of 140, right? So every little bit helps. Before we hop into stocks and the news, Maddie, let's take a quick ride over to the chapel. Let's visit church here. Not a whole lot to see or say here. Taking another stab at that resistance level, though, right? We've talked about the break. That's kind of the next trade. No reason to rehash that conversation for the 97th time. but we're now close enough to that breakout channel, whether you're looking at IBIT or Bitcoin or whatever, that you're going to start, if you're interested, you're keeping those alerts, you're starting to think about it, right? We got the window fill that we talked about on the break of the, we'll just call it the 50-day moving average. Now comes the big battle, right? Can we break through this? It's a good looking potential breakout in my eyes. I think you have the same philosophy. You and I both have kind of anchored towards IBIT for the kind of the vehicle to play it, but that's just a preference thing, right? Pretty good look. Hasn't broke yet. Till it's broke, it hasn't broke, but we can always prepare on these potential breakouts. And the best thing to do is prepare before they happen, so you know how you're playing it if it does happen, if you are playing it.
Yeah, we're gonna be dancing a multiple time frame conversation on this one. It's been a lot of time in consolidation. We're talking about 3 months in consolidation. In general, wide range consolidation. You're now talking about at the top end of that channel here, which is always going to be a very interesting multiple time frame breakout type situation. And so, like, I wish it was this clean with that potential trigger above 45. It's not that. It's a little bit more dirty with some top end around 74 and the bottom end around 72, 73 here, but it's still a very similar conversation. You look at that multiple time frame breakout right there. You look at that multiple time frame breakout right there. You've spent a lot of time in consolidation here. There's no overextended conversations, maybe slightly on the daily chart just because you're upward near resistance, but not a lot of concern there. And you're just looking at a multiple time frame situation on Bitcoin right now. IBIT here is our cup of tea when it comes to the directional saga in Bitcoin, and you're legitimately looking at a very, very similar type situation here.
Yeah,
IBIT does rock very similar to what Bitcoin does. One of the reasons why I like it a little bit more than some of the other ones, but
agreed.
in terms of that analysis, same thing, right? You had that nice little breakout of 38. You had that double snap back against the 38 price action. Man, it sniffed that stop loss a few different times here, Frankie, trying to breach that 38, but
Couldn't do it. Couldn't do it.
I got the same philosophy throughout the entire week. It's just a matter of waiting on that. I'm not going to be aggressive in the stop loss here, just given the fact that you're going to be dancing that, and I want to be able to catch some of the price movement, but as it does get into 42, I will alleviate some of it and then add on the breakout. Talked about that yesterday. And so it's just kind of one of those ongoing situations, Frankie, where you like it, you like it, you don't love it because you would absolutely love it if there was no overhead at 42 here. You would love that breakout. You would. I'm just kind of, you just know me. I love clean things, right? And it's just a little dirty there. So I do think the cleanliness is the 42 breakout, not the 41 breakout. But if you haven't done anything, Frankie, I wouldn't fault anybody for saying, let me get it right above the highs here and maybe front run that 42 breakout. I wouldn't hate on that, but I also think that's kind of nickel and diming the technical.
Yeah, I just have a hard time seeing why that, when you had the opportunity on the 38 break or the 38 pullback, just seems.
How people are like,
I do.
They miss it that day. It's doing something else. It's
that's not tackle traders though. I know them.
Yeah, I agree.
So, well, that is going to do it for the Skyline. We're going to shift gears, Maddie, into stocks in the news / earnings roundup, my man. So the floor is yours, partner.
Well, honestly, there's only one stock in the news here today, and that is GameStop. And they were going to be in the news regardless of the situation.
They're in the news now, right? They're back in the news.
They just are. Fascinating day. I think there's a lot of people waking up to what earnings reports are all about. But fascinating in the sense that you got the Roaring Kitty live stream going on right now, whether he's going to exercise those or not. I really don't care. Like, doesn't exercise, don't exercise.
Yeah, trader's call, right?
Yeah, that's trader's call. So, okay, well, let's have fun doing that. But I understand the storyline. It's a major storyline, no doubt about it. I'm just saying, I don't care if a trader exercises a call option. That's all I'm saying. In terms of GameStop here, it'll be fascinating to see where this ends up here, Frankie, because his call options, I believe, they're at $20, I want to say. So he's not really at risk right now. But Twitter in the last 24 hours have been fascinating. That's all I'm going to say on this story. Fascinating Twitter has been. Now, on to the real news here, which is from an earnings perspective. GameStop comes out and they report a miss. They reported a 12-cent miss against an expectation of a 10-cent miss. So we have a slight miss on the EPS side of the equation. Revenue also came in as a miss. They came in at 881 versus the 900 million expectation. You got a miss on EPS, you got a miss on revenue. Revenue was down 29% year over year. All right. Those numbers are not numbers, regardless of the company, that get gobbled up in any capacity. Those are misses and misses. And not only are they misses, but you got to miss against a expectation that you were already going to miss. That's a nasty 1-2 punch from an earnings perspective. Now, they don't provide guidance because how could they provide guidance? GameStop is not that type of a company. But when you're talking about secondary news here, Ryan Cohen, the CEO of GameStop, in all the fur of what's going on from a roaring kitty and a will he or will he not exercise his call option storyline. Well, Ryan Cohen's like, you know what? We're going to make sure there's the liquidity necessary to be able to do whatever we need to do. And we're going to release 75 million more shares. Now, this is on the backs of them releasing 45 million shares on this candle here. Okay.
Yeah.
So a week ago, GameStop releases 45 million shares. Today, they release 75 million shares. How is this not a money grab for GameStop? How is this not just a money grab for GameStop? And I'm not casting judgment there. I'm just saying, based on these fundamental numbers, I would say that's a cash grab coming out of GameStop. This is a negative earnings report with a negative miss on EPS, a negative miss on revenue, a negative secondary news. This stock should be down far more than it currently is today. I don't have an opinion on the roaring kitty versus everybody else hedge fund. I don't even care about that storyline, quite frankly. All I'm saying is, from a fundamental perspective, from an understanding of how earnings works in the market, which is something I do have an understanding of, this stock should be down more than it is currently. And so I wouldn't be looking at GameStop and I wouldn't have it on a watch list. That's me personally.
Yeah. Listen, that's, as a technicians, we like cleanliness and stability and, things that we feel at least have a predictable, probable nature to them, right? Giant bars like this are generally not a technician's cup of tea. I'm with you there. Well,
the technical side is too volatile for,
it's just too crazy, right?
Like we don't love volatility. Volatility is the kryptonite of all things technical analysis. From a specific options perspective, those things are really, unless you're gambling, parking some money in a call option and gambling, or put option and gambling, it's hard to get an edge on that, quite frankly. On the cash flow side of it, I couldn't imagine carrying cash flow systems through that type of volatility. I could not.
You get paid for it if that makes you feel better.
On the fundamental side, you got a company issuing, what would that be? 120 million shares in the last week,
over the week, yeah.
On negative earnings analysis.
It's just a tough story to get behind when you put it.
What are we doing, guys? What are we doing?
Listen, you GameStop. You do you. I'm rooting for you, but I don't
want to bury GameStop. I don't want to do that. I like GameStop. In fact, because I have a negative opinion of GameStop in this halftime report, I'm going to physically go to a GameStop today and get something for my daughter because I enjoy GameStop.
I've always enjoyed. Yes, you and I went to many GameStops in our day.
It's a company I would love to get behind, until I see a company releasing 120 million shares in a moment where it just screams there's manipulation going on here.
Screams that maybe this is not the selling point for you. Yeah, fair enough. Well, hopefully I can give you
$10. We'll have a conversation.
Okay, all right, I'm with you there. Well, hopefully I can give you a few cleaner charts here as we get ready to wrap the week up here in the halftime report. The last thing we always do is a creative little segment we call Frank's Charts, where I bring 3 stocks that I've kind of found in my scanning for further discussion with the coaches in our scan report meeting. We break them down. I see if Maddie can get on board with them. And you know what I'm about to say right now. If you're not yet a member of Team Tackle, there is never a better day than a Friday to head over to tackletrading.com. Get signed up for a free 15-day trial so you can get access to that awesome newsletter, the traders report, world-class community, all of the fun stuff that we're doing. Just never a better day than a Friday. Make sure you are ready to rock and roll heading into next week. With that said, Maddie, I got 3 for you. I think they're going to be cleaner technically than GameStop because that's a pretty easy ask right now. I would imagine. I would hope so.
Place in GameStop right now.
So yeah, that's a great place. So I'm gonna start off here. I got a couple different looks for you. I'm gonna start off with GM. All you gotta do is take off an E there.
Absolutely, 100%. Take the E off. Yes, I'm in. I already wrote it down.
It's a really solid look. So these guys, we were watching them for a breakout about a month ago, right? As they were kind of, they had that gap up on earnings, and then they kind of digested for a couple of weeks and just were never able to break out. Ended up getting a deeper retracement, coming right back into support, working their way back up. You know, me and Matt, we hate when we see that big green bar. You're running super hot into resistance. We want it to dial in, take a breather at the top, let the 9 catch up. Well, that's what we got this week, right? We really just got a little bit of very mellow, gentle upward drift. The 9s caught us up. We got a big, chunk of real estate above us. If we can break through this, now we have, can easily anchor to the 9 from a stop loss perspective if we would choose to do so. So I think the picture kind of sells itself. Maddie already gave away that he signed up here. Any thoughts, Maddie, that you would like to add?
The cleanliness here, Frankie. I mean, think about the biggest problem people like you and I have with companies like GameStop is not the company. It's the randomness of the volatility. And so it has nothing to do with the company, honestly. They're just using the company to create the volatility. And so it's just one of those things that as a technician, you learn to appreciate cleanliness as a technician. And when you see cleanliness, especially from a breakout scenario, right? I mean, retracements are probably a little bit more dirty in general than breakouts can be. But breakouts can be dirty as well. But when you see something really clean at resistance and you get your what you describe, hey, me and Matt, we like to get things cleaned up going into resistance. We like a little bit of hesitation going into resistance. We talk about it all the time, Frankie. Like, anytime we're talking about a stock, a commodity, a currency, and the equity market itself at resistance coming from some momentum, right? We're always the guys are like, all right, we see the momentum, guys, but we also see a multiple timeline resistance level that has been smoked a few different times with momentum as well. And so that kind of stands out. And so what you want to see is you want to see that get cleaned up through consolidation. You don't want to see it get cleaned up through additional volatility. You want to get cleaned up through less volatility, tight consolidation, and that's what you got out of GM here today, or not today, but this week. Let's also put some respect on GM's name. That's the Tackle 25 name, as they did take Ford's position from last year, well, the last couple of years on Ford, and it was a good decision. GM's been a much better cash flow stock this year, and it certainly has been a much better directional stock. You look at the weekly chart here, Frankie, and I think this chart stands out from a lot of other charts out there. There's some clean breakouts against the top end, and there is some reversals out there. This is what we would describe as a mid-tier breakout. You have, and mid-tier breakouts can come from different levels, right? But in terms of that mid-tier breakout, you had one here. This would be a secondary one, and it does look like it's got tremendous room to run from an openness perspective. You look at this on the longest of the time frames. We'll look at that on a monthly chart. You look at that get cleaned up over the last couple months here. That breakout looks alive and well, Frankie. So GM, I'd be shocked if it's not on the traders report. We'll put the for those of you who don't know, we put where stop loss placements need to go under, multiple different targets, where the entry price is. We do all of that in our traders report. I would say GM makes the cut here, Frankie.
Yeah, I would be really surprised if they don't make the cut as well. So that was an easy one. Now this one, I knew I was going to get you on GM, and I think I'm going to get you on this one. But I know there's always a little bit of poor fashion sense bias whenever I bring up Crocs. I know some people are ready for fashionable footwear. Some people aren't. But
Don't love the shoe, do love the company.
The company's just solid, and it's in a pretty good spot here in my eyes. You had that recent breakout, and you came right back down. A little bit of a volatile pullback, but really dialed it in, settled down over the course of the back end of this week, kind of testing that 20-day moving average / the old resistance as new support here on Crocs. They got a ways to go too, Maddie. Other than that swing high there, about 160 that they put in, leading in to this pullback, you really don't have resistance to 180. I mean, that's kind of the window that you have to work with. So you've got a big window. You've got a pullback into a zone that you would expect to fight for you, right? Old resistance acting new support, bull area between the rising 9 and the rising 20, starting to show a little upward movement in price here today, probably deep enough that you wanted a little bit of a confirmation candle. So you probably like that it's doing that today going into next week here. I think it's a really intriguing risk to reward scenario on Crocs right now.
Yeah, I agree with you here, Frankie, on Crocs. The one thing I would say that is against Crocs here technically, and again, it wouldn't stop a bullish trade. It would kind of adjust how you target here on Crocs more than anything. Doesn't have anything to do with the quality of the technical pattern within this bullish trend. It's the trend momentum is slowing down a little bit.
Yeah.
And so the only flaw here, Frankie, in this retracement is you got a big upward movement in price here. You got a smaller upward movement in price there. That's a little bit of trend momentum changes. But that wouldn't stop a trade. That would just adjust how you
aggressively target. Yeah.
In terms of the candlestick story here, Frankie, I think this is a very compelling candlestick story. Very consistent technically, I would say. Big red candle, bigger red candle, smaller red candle, smaller red candle, green candle. That's the technical story you want to see in pivot confirmations. You want to see, again, in pivot confirmation, you have big red, small, upward movement in price. That's the 3 candle pattern you like to see. And so you got a really compelling story of a creation of support pivot. And I do like that. The second thing I like about this retracement here, Frankie, is it's in a go or don't scenario on a retracement. And that's really important for those of you that are unfamiliar with retracement analysis. There's multiple different phases to retracement analysis. You got the momentum retracements at the 9 EMA, which when you couple that with slowing momentum in trend, those usually don't work out very well. You get the standard retracements typically to the 20-period moving average, equate to about a 38 to 50% pullback against the previous leg up. And then you got deeper retracements, which oftentimes coincide with the 50-period moving average, sometimes the 20-period moving average, typically a 61% retracement on the daily chart as well. And so that's kind of the standard textbook approach to it. But in retracement analysis, there is a point on that chart where you no longer look at it from a retracement perspective. And that is this point right now, because if you give up the 20 here and you don't have anything till you get further down, and that further down is underneath the previous pivot, there's no bullish trend at that point anymore.
Yep.
And so you got to like that go or don't scenario right here, where you can just look at an entry above the high, get a stop loss underneath the base of support, and you basically set it up as a set it and forget it type scenario in a go or don't. So I like the find here on Crocs, and I like the multiple time frame breakout on GM. I like the Crocs pullback here. I do like GM a little bit better, but that's because clean breakouts are really
it's a tough time. It's the tough.
Crocs looks good here, bro.
So listen, everybody looks better in Crocs, bro. That's just been scientifically proven.
We'll stop on agreement.
All right, I got one more for you here. And I'm debating, but you know what? I'm going to go with a post-earnings development on BJ's Wholesale. BJ here, big pop on earnings. And the thing about this recent pop on the earnings is it took out the last level of resistance that these guys have. So we are in clear sky territory. I mean, that was a tremendous, tremendous move. We went from 80 to, almost 90, and that's just a little bit out of character overall for this stock. So of course it had to digest it. But what's happened, Maddie, since then is the 9 has held, right? We've actually got that little higher low, I'm sorry, little ascending triangle look here, kind of that base where you got the triangle, right? The 9 pushing up, 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 up. If we can break to the upside, I don't think there's any logical reason to think we can't have another bit of a leg to the upside here on BJ. I think this is a pretty good development after that monstrous move on earnings. I think it's pretty clean. Wouldn't mind a couple days, let the 9 get a little bit closer, but that's just me being picky and asking. It never hurts to ask, right? So looking at a breakout above these highs on this post on the secondary earnings pattern here.
Technically I can't have any, I don't disagree with you at all here. Nice consolidation, post-secondary report set up. The only thing I would say is fundamentally, I think they got a little bit of a gift on their earnings analysis. And so I struggle sometimes matching my fundamentals when I'm reporting on an earnings versus, seeing a secondary move. My confidence usually is not as great on a secondary move if it doesn't have a very compelling earnings story, because markets can do whatever they want in the short term, but in the long term, fundamentals do matter. Short-term fundamentals don't matter in any capacity.
Yeah.
Long-term fundamentals matter extremely, extremely much. So I would not fault any technician here in any capacity. This looks pretty clean, quite frankly. I would throw a little bit of cold water due to getting a little bit of a bump up from an earnings report that was just in line, basically. And if this was coming from a lower point on the chart, I wouldn't have as much care. But you're very elevated here. So
you broke through it all. Yeah, you broke through it all.
I think you have a very good argument, Frankie, on both the long-term chart, because you just broke out a long-term consolidation on the monthly chart. This would be the secondary pattern after that multiple time frame breakout, following a positive response to earnings. I think you got an extremely compelling technical argument here. I just don't agree with the fundamental argument, which means I would disagree with the setup. But in general, I wouldn't follow the technician here.
Yeah, fair enough. I have no opinion at all on the fundamentals. You know me.
I know you don't.
You know me.
That's what I love about you. Honestly, don't change. Don't change. Don't ever change. Ever, ever, ever.
So when you guys give me when I hear Matt, Mark, Greg, bring up things that are lower prices with great fundamentals, you better believe I'm all ears. But when I'm talking trading, they say fundamentals, I go to my happy place in my head. I'm like, da, 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 da. You done yet, bro? Well, Maddie, that'll do it. We're going to get out of here, go do a lot more of this with the other coaches in our scan report meeting as we prepare to launch that newsletter and that traders report. So again, Team Tackle, I want to thank you for being so awesome, for talking trading with me all throughout the week, whether it's in the halftime report, in the Delta Dog Labs, in the Step Channel. I love you. I love hanging out with you. We'll do it all over again here next week. And if you ever need anything from me, you can hit me up over in the Step Channel in Discord. If you're not yet a member of Team Tackle, come hang out with these awesome people. They are fantastic people, fantastic traders. We have a heck of a lot of fun. We work hard. Get access to that newsletter, get access to that trader report, get access to the coaches show, learn more about earnings with Coach Matt this upcoming Tuesday, and catch up on the last couple that you missed with him in the coaches show. Hit the Cash Flow Club. We do it all here. We have the best community, bar none. Come over and join us. Have a great weekend, most importantly. And Maddie, I'll let you take us out of here, my man.
Yeah, Majid, how come PayPal was not your selection? PayPal needs to get dialed in, but if you attended the coaches show from this week, we actually did a strangle on PayPal, bi-directional trade volatility build, got a real good price action here, literally a couple days after we did that strangle. And so it's because we're looking PayPal bi-directionally. That's why Frank did not bring it up. And technically, it needs to clean up a little bit from a directional perspective. Majid, Pins very quickly, just want to take that. Pins has a nice little breakout here today. Won't make the reports, Majid, because it's ran a little bit too strong the last couple of days for us to prep it for the reports. But a bar by bar action with that type of momentum does make sense. And we don't put bar by bar action on. We need to have very clean technical setups for the report. we don't put momentum based or bar by bar action, but pins certainly would fit that bill. And then Mobileye here, just technically a little bit all over the place here. It's got to get cleaned up. And where can that get cleaned up? In general, you got wide range neutrality on the bottom side of the equation. To me, I think you just put an alert right under 34, honestly. Like this looks like, if you're looking at Mobileye here, I do like 34. That's the pivot formation right there at 34. That's the old support level at 34. That's the 50-period moving average, which will converge underneath 34 by the time we get into that breakout conversation. You got the 200 right underneath that. So I think this is a 34 conversation for from a technical point of view, from a swing trader's point of view. I would kind of like a breakout of 34 there as well. We're going to go get ready for the scatter report meeting, guys, which means we're going to be dialing in our rankings that are going to go into the newsletter for the S&P 500, the different sectors out there. We're going to put together our traders report with our watch list for the stock report, for stock options, both on the bull and the bear side. The traders report has the best technical setups in the market. So if you're looking for that macro analysis to understand everything that's happening in the market on a week in, week out basis, that's the Tackle Trading newsletter. If you're looking for a report with those picks that are on fire, looking really, really good from a technical perspective going into next week, that's on the traders report. Those two reports we put together every single Friday for our community. And so we'll have those reports for our community later on tomorrow morning. We usually get them done later tonight, put it all together in the morning, and we'll get everybody, and we'll send an email tomorrow to the pro members with a link to those two reports. So definitely be on the watch for that. We always put the reports in Discord too, in the premium channel in Discord for the pro members. We put those links to the reports there as well. Frankie, thank you so much for hanging out with us on the halftime report, Team Tackle, all week long. We love you guys. And if you need anything from us, go make sure to email us at team@tackletrading.com. You can hit us up in Discord as well. With that said, you guys have a wonderful, wonderful rest of your week, and definitely do your weekend routine. And the weekend routine is reading the newsletter, watching those videos, and getting ready for those watch lists on a week in, week out basis. With that said, you guys have a wonderful rest of your day.